Yeah, I've been talking to investors, and FIM Partners is an investor themselves. So I think all of us want to see the dust settle a little. There's been so much change so quickly. We still want to see where the exchange rate can stabilize. When the central bank starts to inject dollars into the market, we'll find an equilibrium. And at that point, we can then say, okay, in the new environment, pro-reform, how much do we want to put into Nigeria?
Okay, what's a fair value for you for the naira? I know it's been a relatively short period of time in which we're trying to sort of find our feet here, but what's fair value? 700, 800 naira to the dollar, which is pretty much where parallel rates were?
I've got a model which I've been using for years, and I've been telling a lot of Nigerian banks and corporates over the last year that it's about, well, last year I was saying we need to go to 675. Today, as of May, my 26-year model says 690. Of course, it's a moving target with inflation. So in a year's time, it's probably closer to 800. But today, it's 690. So anywhere around 650 to 720, I would think is perfectly reasonable. In fact, even slightly wider than that. And we are trading there today. So the official rate did move to that into the 660s over the last 24 hours. And the INE window, one of the other windows, we haven't converged all the rates yet. That's been trading much higher towards 800, 750, 790, I've heard. So there's an awful lot of what's the currency rate in Nigeria? Well, there's still quite a few. So we haven't quite converged just yet.
All right, then. And even on the FX side, because the central bank put out this statement, or rather this explainer on their Twitter account, and they said, there's still capital controls essentially with respect to, I think, 43 items that they're simply not going to sell you US dollars or not on. So in that sense, given there's that they need to sort of fix, at the same time, real rates, I believe, are still negative, and we're expecting inflation to edge close to 30% by the end of June. There's still a fair bit of work to do on the monetary side, isn't there?
Very much. So I was talking to another investor last night, and he was saying 9% rates in Nigeria. Well, I was looking at 6 or 7 in terms of 1 year, 6, 7 kind of lending rate, but inflation is 22. It's not an attractive combination. So you do need to see interest rates considerably higher from here. There's a lot that they can be playing with. There's been these reserve requirements on the banks which have restricted kind of money supply. That probably needs reform. Something like 30% of all deposits in the banks have to be parked at the central bank at 0% interest rate. There's an awful lot of change still to be done, but I think no one expected as much as we've already had in 2 weeks. So I think if they could slow it down for a week or two, I think it would help the markets digest, actually.
Indeed. There's an interesting note that you sent a little early in the week, though, and you pointed out that, the revenue computations that Nigeria has have changed a fair bit, and they ended up finding close to 50% extra revenue. That's a sort of jump that quite a few governments, including the one here in Kenya, would be absolutely envious of. But how does that then change Nigeria's debt service metrics? Because I believe last year interest revenue interest service rather as a percentage of revenue was close to 100% or even more than that.
Yeah, around close to 100% against the federal government revenues, because the federal government gets, in the end, about half the revenues the government, well, that was under the old data, about half the revenues that the government gets, but it carries all the debt. So it's around nearly 100%. Absolutely. So everything the federal government got, is spent on interest payments. The figure I was referring to on Twitter was that it was 33% of all revenues, the interest costs. So a third of everything they raised was going on interest. Under the new metrics, that drops to a fifth, to about 22%. The only thing I'd say is I've had quite a bit of behind the scenes kind of pushback on this. I think there's some degree of skepticism about the new revenue numbers. There's been very little information on where the revenues are being counted. So before we know that this is what the IMF is going to use or the government's going to use, I think everyone's going to have to wait and see it for a lot more detail.
So in summary then, Nigeria, interesting changes in 1 week, but for the time being, external money is going to essentially stay outside and watch where the dust settles.
Yeah, I think big picture story is Nigeria was on the course to default. That was the road it was on, and it has veered very sharply away from that. Getting rid of the fuel subsidy, allowing the currency to get weaker, really helps the fiscal side. So this is already a huge change. What we then need to see is interest rate rises to help attract in some inflow of foreign money, and we need to see just how the dust settles, and a new central bank governor, someone who's going to be accountable for the changes we've seen. So that's and a new government. I mean, there's quite a lot of stuff still to come in the next few weeks.